Okay, and good morning, strategic traders. Okay, here we go. This is the third video of our run for last night, and we have two things combined into one here. And this is a little bit to show you how trades build on top of one another and how you use multiple time frames and multiple trade setups for the same underlying asset. Now let's go back to the beginning here. We have looking at the chart above our actual forex chart. You'll see that current price is at 104.56, 140.56. And I want you to look at those big rust orange lines in the center at 140.80 and 140.20. Those represent our Nadex binary options trade that we have already made the insurance for last night. We actually have made $100 cash money for those positions. Those positions are only $80 each. So as you can see from that setup that we're in right now, both of them are in the money. Okay, we could close them out right now for a profit of $27, but there's like about $13, $14 more to be made. We have about 30 minutes left in the trade, and that's worth roughly 40 bucks for one contract. And these contracts can be, we can do one contract, 10 contracts, 1,000 contracts. It doesn't matter. They're all the same. Now we have 40 bucks that's being made here because price is very much in between the two. But if you look in between those, where current price is now, you'll see that it is directly above a little dotted green line. Well, that, my friends, is an entry order to sell all the way down to the take profit, which is the blue line beneath our 104.20, 140.20. That is a pure forex trade. That is a straddle trade because I'm looking at my take on the London daybreak strategy, which it didn't kick off at 3 o'clock. When it did, but we didn't get the volatility that I was looking for. But you'll see that we did make a high of the day, which was right when we broke out and closed out our 140.80 forex trade. We got the insurance on that, clicked out, and we are now good on both of them. And now we're getting ready to enter into the next phase of that trade, which is the straddle trade. Now let me show you how this would have applied if you had been a strategic trading client. What would happen, first of all, was I would have contacted you with our strikes last night on our Nadex, and you would have purchased both of those Nadex options. Then you would have we would have already have paid a premium. Now let me explain what your premium is. For one contract like this that we have right now, your premium cost is $250 a month. Now you're saying like, holy shit, that's a lot of money, Batman. Well, no, it's not. Because you gotta look right here. You're going to make on this trade alone, just the Nadex trade, you're going to make $40 of that. And usually we aim for $50 to be the actual payout. Now let's just say that you have made every trade, whatever you're going to do, you're going to do 20 trades like this a month. There are 20 trading days in a month. And if at a minimum, you get around $25, okay? If a minimum of $25 per trade, that is $500 that you make for the month doing this system. And you're guaranteed to get that because either the options themselves are going to get it, or if the option doesn't get it, the options and the insurance. Because I've made $100 with that $250 of insurance money that you have, the premium that you paid me. I've generated $100 that's waiting for you right now. And the way that I get paid is if that money is good, then you would get that 100. You would get $80, or that it would be sent to you. And if that option, if the option expires in the money, and we have generated $100 of profit, well, I'm gonna hold that for you. I mean, it's my money right now. That goes to the company, but we're gonna hold that because we have another trade coming up. and we're going to use that $100 to cover you until that money is actually spent. And then we'll continue on. So now at the end of a month, you have made all your trades, and we have a $250 premium that we get to keep. And that's how we keep on in business. This business model protects you and allows you to take trades and go to sleep and know that you will be protected in the morning. Now, that's just the insurance part of it. Now, you also have money. Now what if we pay you your money? Let me explain what happens. Once you make profit and we pay your money, you can have that money sent right to you through PayPal, or if you choose to, and a lot of people choose this and it's a wise option, you can have that money, those funds, deposited into your own personal Pax Forex account. And if that money was deposited in your own personal Pax Forex account, this straddle trade that we're in right now on the Forex side would be the option, would be the call that I would tell you as a client to make. Either I can do that for you here and manage it for you, and we can copy trade the entire system and have everyone in this trade, or I can tell you like I told some of the other clients, and they place this trade themselves. But now you have a options trade that is in the money on both of them and insured, cannot lose money, and you have a straddle trade on the actual profits that were already made earlier from your other trades. So now profits are making profits. If we click into this trade right now, which we're still hovering above the entry point, but if we click into this trade right now, you would make money on the initial trade that you took, and your profits from the last trade will actually be making profits off of this one. And these things are all built off of one simple underlying asset, the pound dollar in this case, two platforms, connected ideology and trading, and one hell of a CEO, one brilliant mind over here at Strategic Trade. But you know what? I'm only brilliant because I have the not even desire, because we all have the desire. I have the dedication I put into this company. And I've gone over thousands and thousands of hours of data and trades and historical data and back testing for you, so you don't have to worry and you don't have to go through these things. You can sign up with us, and I'm gonna tell you how easy the sign up process is, people. Check this out. You don't have to go through a big, long verification process like some of these brokers want you to go through and send in your social security card, birth certificate, ID, picture of a lost dog, your first school, a note from your high school teacher, your first doctor statement saying you got all your shots. None of that good stuff. You contact me and tell me you want to participate in what we're doing. We have several accounts with Strategic Trading under our flag that are already empty and just waiting for you to deposit funds. We can deposit those funds either directly through us. You can pay us directly through PayPal, or you can withdraw and deposit into your own personal Pax Forex account with Bitcoin. You can also open your own account under your name and go ahead and fill out all the paperwork, and we can link that to this one. But the message I'm trying to get across to you is there are so many ways to connect with us, take advantage of what we're doing, and everyone can make some money off of this. Now, let's look at what's really going on here. Now, we need to pay attention. We have our native trade, which is clicking on all cylinders pretty much. And that one, I believe, we have 15 minutes. I believe that one's going to be good. And we're about to clock into our Forex trade. And we're going to see how that plays out. Now, I believe what's going to happen is in the next 15 minutes, we are going to sink tremendously low. And we are going to, we're possibly going to breach that 420 level. And we're going to see how that plays out. But one of the things that you also need to consider about if you decide to become a member of us and get in this Forex account, look at the time. It's 5:45 in the AM. And people, this is regular day. My day is half over. Okay, this is the time that I operate. This is the time that we make these type of trades. Now, if you're up at, I've been up for hours doing this since 2 o'clock in the morning, but this is what I do. This is the hours I choose to work. And I can work those hours for you. or you can get up and do them yourself. Because now what's going to happen is once we clock into this forex trade down here, we have to manage that trade as well as manage everything about the native trade. But the native trade is a simple thing. It is open, and we're going to leave it open to expiration. We have the money that we made for this, and we have it segregated and put to the side. That money is now waiting to be used or not used according to our plan with the options. Now we have to manage the forex trade that we have going here. And the wonderful thing about the MT4 system, copy trading, people, copy trading. That's right. I can link all 1, 2, 25, 30. Right now, we have currently 21 clients with our copy trading system, and all 21 can be connected right now. And when I move those stop losses into a take profit area, once we clock into this, once we fall down to about 410, 430, 435 area, 430, 420 area, once we clock into that, I'm going to move our stops down on that entry level, past the entry level, and we will guarantee a locked-in profit of maybe 10%. Now, here's something else I want to leave with you guys, and this is about money management in trades, especially forex trades. There are some big misconceptions out there, and I don't want you guys to get caught up. I'm going to do a video one day on all of them, but let me tell you something about money management. When you go into a trade, no matter how big or how small, screw what you were told in your initial learning phase, because you learn most of that stuff through the brokers that want you to trade with them, and they're going to tell you how to trade the most profitable way to make money for them. It might seem like it's for you too, but it's for them. Here's a formula that you can pretty much securely stay afloat and never crash an account. When you enter into a trade, you enter into the trade to profit out at a value of 10%. Take profit, 10% of your account value. All right? And you put your stop loss. That is a stop loss of 5% of your account value. Now, this number will fluctuate over time, over the course of a month. But I'm not talking about 5% or 10% of its current value, but 5% or 10% of your starting value from trade one. If you have $500 in an account, you want to set it to make $50 or lose no more than 25. And if you keep that 2-to-1 ratio in every single trade, 5% risk, 10% growth, for you to blow a $500 account, you have to lose every single trade. All 20 trades must lose before you blow that account. And if you do not blow your account, which you will not, every trade is 10 trades will double your account. So you can lose all 20 trades and just lose your initial capital, or you can go ahead and you can go ahead and 10 trades, you will make your full value. Now, I'm going to go ahead and pull this down, and we're going to look at our forex for a minute, because we've entered into this trade, and let's see where we're at. And we've taken a small position right here. Now, let's look at what we've done for the day. Earlier, I had a trade for $24 that we closed out on. That $0 trade from Friday. We closed that out. We have we made $100 with this trade that we're looking at, and now we're into a current trade that we're making about 16 bucks. Let's look and see where we are on this. That's on the 1-hour chart. Let's move this down to the 5-minute time frame. And I'm going to have to plug my phone in, guys, so we lose power here. Now, this is important, people. This is extremely important. When you have a trade, I don't care what it is, Rule number one, guys, don't let a winner become a loser. Don't do that. And the simplest, easiest method to prevent that from happening is use your stop loss. And the way you should use your stop loss, the formatting for that will always keep you in profit. 2 to 1, once again, what is your spread? How many pips is your spread? So in this case, I can tell you the spread was, I think it was 2.5 pips. So we're going to call it 3 pips. So 3 pips was the spread. Now, 6 pips is going to be where I put my stop loss. So if I lose 3 pips on the spread and I make 6 pips minimum on the trade, there is a 2 to 1 ROI. And when I say ROI, risk reward on your actual cost. People have the wrong conception of where your ROI lies. It's not in your potential profit. It's not in the fact that you could do this or could do that. Your potential return, your potential profit, your ROI lies in what actually did you spend. What actually is it that you cannot get back? And what you cannot get back is the spread cost, the transaction cost, people. That's what that is. And no one in the history of trading has ever gone broke making $2 for every one that they spent on transaction. Has never happened, and I doubt seriously if it will ever happen again. Now, back to what we're looking at as far as not letting a winner turn to a loser. Well, we've dipped hard or lightly into this pound dollar trade. Yes, we have. Now, to practice what I preach, especially right now, I can't just jump in and take stop loss and put it in because we are actually very, very close to the entry point. We are entered at right at 440 is what we're entered at. So right now, well, let's look and see. All right, we entered at 140.50, and current price is 140.48. So we only have 2 pips that we got. So 140, 140, 44 is where I would have my 6 pips, and that is where I want to place that 140.44, and 140.47 is where I will place my stop loss. So once we get down there, that's what we're going to start doing. And right now, we are actually hovering around a little bit. We have 4 minutes left to go. And this 4 minutes will determine how rapidly and how fast we're going to place what, if anything. So let's get back over here. And let's put this on a 15-minute chart. Actually, let's put it on a 5-minute chart. We only have a few of those left anyway. I was on that. Okay.